starting with insurance company accounts. Accounts of insurance companies. I'll be waiting for 2 minutes for the members to join. Yes, guys. Waiting for the members to join, and we'll be starting with accounts of insurance companies. First 15 minutes we'll be talking about some other matter from accounting standards. By the time other members will join, and then we'll proceed. This is the chapter accounting standards, AS and Ind AS. AS and Ind AS. And here we'll be solving few of the practicals of one of the standard till the time more members join the class. Yes, guys, here we start with the chapter accounting standards by the time more members will join. So here we begin. Maybe in the next lecture, we'll be doing further something about accounting standards. Here we start. Solve these questions, understand these questions well. I am talking about inventories. The concept to major extent, to most of the extent, the concept are the same except minor changes between AS and Ind AS. But presently, we need to learn what the logics are. So we start with the logics. We start with the logics. We'll copy the question and try to answer every question. I am talking about accounting standards. See, you must be knowing the golden rule. You must be knowing the golden rules. The closing stock is carried at cost or NRV, whichever is lower. That is called prudence principle. That is principle of conservatism. You will carry the inventories at cost or NRV, whichever is lower. So either 1 lakh or 90,000. So the answer is 90,000. The first question is done. Yes, the members are increasing. Good morning. You can ask any doubt from any chapter, guys. Good luck. The question says, we have a stock, but it has become obsolete. It has become obsolete. This stock has become obsolete. Instead of obsolete stock, if we have to replace the stock by a new stock, we have to pay 40,000. So new stock, replacement of this stock will cost us 40,000. So replacement value is 40,000. The replacement value is 40,000. I've not said complete things now. 10,000, spending 10,000, spending 10,000, we can make the same goods in the working condition. Let's understand in other fashion. First option, obsolete goods. Second option, you buy from the market. You have to outflow 40,000. Third option, on this 60,000, you outflow 10,000. You make the outflow of 10,000, get these goods repaired, and then they are as good as the replacement worth 40,000. So to value it at 40,000, otherwise without repair it is valueless. Without repairs it is valueless. By spending 10,000 you can make it worth 40,000, but before that you have to spend. Means after spending it will be worth 40,000, but before spending minus 10,000 we can presently worth it at 30,000. So the answer is 30,000. Good morning everyone again. Our main objective for today will be accounts of insurance companies. Till the time more members join, we are doing the topic accounting standards. Your few members are messaging me, so I'm responding to them as well. Guys, next question, question number 3. See, AS as well as Ind AS says the interest is never part of cost of inventories. So that is the reason we have not included the interest in the calculation of cost of inventories. That is in conformation with accounting standard or Ind AS 2. The stock is carried at cost or NRV, whichever is lower, cost or NRV, whichever is lower. Item wise. So item wise 28 is lower, item wise 28 is lower, 32 is lower, 32 is lower, obviously. Me same 16. So the closing stock will carried at 28, 32 and 16, 76 is the answer in lakhs. In such a short span, we were able to do 4 illustrations. Another after few minutes we'll be starting with. Good morning, everyone. Now the cost is everyone. The cost of closing stock is 10 lakhs. The NRV, net realizable value, is 11 lakhs minus 10%. The net realizable value is 990. Whichever is lower, the answer is 990. See, delayed charges is just like interest oblique penalty. These should be never part of cost of inventories. It shouldn't be part of cost of inventories. So the management has decided to value stock. Earlier, we used to include this cost in the cost of inventories. Now will not include, thus reducing profit and asset. Thus reducing profit. And value of asset. Guys, the cost is 13,000. The cost is 13,000 versus NRV 18,000 will carry it at 13,000. 22 versus 30 will carry at 22,000 item wise. 40 versus 36 will carry it at 36,000. 50 versus 55 will carry it at 50,000. 125 versus 139 will carry it at 1,25,000. Making use of calculator. Answer is 2,46,000. Carrying value of inventory. So carrying value of inventory. Why the answer is, acha, that is, oh sorry, that is not the item, that is the total. That is not the item, that is the total. Okay. Concept is not wrong. This is not the item, this is the total. So the answer is 1,16,000. 116 or one something else. 1,21,000. Okay, totally. Water. Closing stock is to be carried at cost or NRV, whichever is lower. Stock is to be carried at cost or NRV, whichever is lower. So NRV is lower. Cost is lower. Cost is lower. So this is the answer. So answer is 4960 3450 1500 9910. So answer is 9910. Now, now the total stock is 5 lakhs, of which stock amounting to 31,000, whatever they mentioned. Cost of material plus expenses incurred and selling distribution expenses to be incurred and selling price. We do it. Wait. It will be beautiful. Out of 5 lakhs, this is the problem. Out of 5 lakhs, this is the problem area. Out of 5 lakhs, this is the problem area. Let's identify the problem area. Let's identify the problem area. This is the cost incurred. This is the cost incurred. This is NRV. So cost incurred is 12,000. NRV is 14,000. NRV, net of expenses. This is 5,000. This is 4,000. This is 15,000. This is 16,000. So the carrying value will be 12 or 14, whichever is lower. 5 and 4, whichever is lower. 15 and 16, whichever is lower. So this is the answer. This is the answer 31,000. Totaling may be correct. Yes, correct answer. Next question. You understand the logics and behavior. Wait, let's begin with insurance company accounts as decided. Now will not be waiting more. Now will not be waiting more. So guys, we start with the insurance companies. Here we begin. Accounts of insurance companies. See, I will show you something. I will show you something regarding insurance companies. Guys, we are here with regard to accounts of insurance companies. Where are the PDF file, guys? Here is the PDF file. Here we begin. Guys, here we begin. Here we begin with insurance companies, very slow. Get full benefit, full benefit. Insurance we divide into two, either life insurance or general insurance. Please remember, insurance we divide into two, life versus general. The performer form A contains the performer form A contains the performer of financial statements for life. Form B contains the pro forma of financial statements for general insurance. So let's start with life. This is Form A. Here the nominal account is called revenue account RA, revenue account RA for the year ending. The main income for the insurance company, the main income for the, this is a revenue account. You have to give figures for the current year as well as previous year. Schedule 1 is premiums earned. Schedule 1 is premiums earned, and other incomes are given separately. So income from investments and other incomes are given separately. Other incomes includes consideration for annuity granted. I will explain at the right point of time what is consideration for annuities granted. I will explain. Don't worry at all. Don't worry at all. So first schedule is premium as income and then other incomes, which includes income from investment and others. Expenses includes commission, operating expenses, mainly. Don't see everything, the relevant thing, and benefits paid. That is a expense. I will talk about interim bonus later on. So 1 is the revenue, 1 plus other items is the revenue, 2, 3, 4 are expenses, and the resultant will be the operating profit. So schedule 1 is premium, schedule 2 is commission, schedule 3 is operating expenses, schedule 4 is benefit paid, plus kuch aur bhi hai, which we'll talk about practically. For the time being, ignore P&L account. Come to the balance sheet. Balance sheet has liability side, balance sheet has asset side. Sources of funds is the name of the liability side. It have share capital, reserve, surplus, and borrowings. Current liabilities are not shown on the liability side, they are deducted from the asset side. Now application of funds is the asset side. That includes schedules 8, 9, 10, that is investments, loans given, asset, loans given, fixed asset. 11 and 12 are current assets, 13 and 14 are current liabilities and provisions. And then you will get net current assets, A minus B. So 11th is cash and bank balance, 12th is advances and other assets, 13 is current liabilities, 14 is provision. Any other asset which is not yet written off miscellaneous expenditure is schedule 15. It is of no use practically. So guys, take a halt. It's a revision class. Please, in your brains, remember 15 schedules, please. You remember it, then I will write it down. Let me say good morning again to the members who have joined afresh. Good morning. It's insurance company accounts. You can ask your doubts. Please be very sportive. Please revert back by good morning. Tell your name, tell your doubts. Good luck, everyone. Please remember the numbering. Please remember the numbering. It will enable me to go forward. Remember? Guys, remembered? Let's move further. So regarding life insurance, you have understood revenue account. Schedule 1, 2, 3, 4. 1 is regarding premiums earned. Second is regarding commission. Third is operating expenses. Fourth is benefits paid. What are benefits paid we'll discuss at the right point of time. But first of all, remember the data. I come to the balance sheet. Revenue account pro forma for life insurance is Form A. Revenue account is RA. Pro forma we have seen, we'll see it again. Form A, BS for balance sheet, BS. BS for balance sheet. Schedule number is 5, 6, 7 in rough I am saying. This is share capital, this is reserve and surplus, this is borrowings. Say okay. This is called sources of funds. Application of funds 8, 9, 10, 11, 12, minus 13, 14, then 15. This will become net current assets. 8 is investments. This is application of funds. 9 is loans. 10 is fixed assets. 11 is cash and bank balance. 12 is advances and other assets. 13 is current liabilities. 14 is provisions. 15 is miscellaneous expenditure not yet written off. Guys, what do you say? Can you remember the performer? We move further. Now we are talking about general insurance. Now we are talking about general insurance. The performer of the balance sheet is same. The performer of the balance sheet is same for general insurance. The balance sheet for general insurance. We will call it Form B. B as for balance sheet. The performer is same 8, 9, 10, 11, 12, 13, 14 and 5, 6, 7. The performer is the same. Yes, the revenue account performer is different for general insurance. So revenue account. The performer is different. So revenue account one is premiums. 1 is premiums. 2 is claims. 3rd is commission. 4th is operating expenses. So 1 is 1, 2, 3, 4 premiums, claims, commission. We will discuss about it at length when we'll do the practicals. While doing the practicals, we will do it at length. While doing the practicals, here is the word change in provision for unexpired risk. Here is the word change in provision for what is that? What is that? What is that? We'll discuss. We will discuss definitely. Let's start with the question number 1, guys. Here is all the energy level. Good luck. Good luck. Good luck. We start with the practicals. Now, quickly tell me you want to do the practicals from my notes or from your book. I'm waiting for the reply. Good morning. You want to do the practicals from my notes or your book? Please confirm. Waiting for your response. Eagerly waiting for your response. Quickly respond. Good morning. You want to do the questions from my notes or your book? Hope by now you have responded to my request. Guys, waiting for your response. Why are you not responding? Let's move then. Let's solve questions from your notes. Let's solve questions from your notes. See, there is a general fund, there is a life assurance fund, and due to any profitability, the fund will increase, otherwise the fund will reduce. The balances in fund is 26, 21, 310. For income, the fund will increase. For expenditure, the fund will decrease. Claims covered under reinsurance, it is a benefit. We paid the claim and recovered from reinsurance. And recovered from reinsurance, it is a gain. You must be revising the chapter, you know it. Bonus paid, maybe in reduction of premium, but bonus paid will be expenditure. Interest accrued is income. Outstanding premiums is income. Claims admitted but not paid, or admitted, intimated but not admitted. Anyway, it is a liability. So this is the balance after taking above information into consideration. Let's match it. Please tell me the answer, guys. Now at least respond, yeah. Tell me your answer. Please tell me your answer. Quickly. My answer will be totaling. I will check again. 2615980. 2615. 2615980 is the correct answer. Next question. Be very good. Now, please solve this question yourself. Read this question. Try to solve this question. I give you 2 minutes to solve this question. Solve this and then let me know. Then I will be solving it. Please solve this question. I was looking, have you responded to my reply here or in the WhatsApp group? My answer is this is a separate statement. This statement we call it valuation balance sheet. The life assurance fund stood at the life insurance fund stood at 34 lakhs. Actuary is the person who do the valuation of future claims. Actuarial valuation. So to net liability as per actuary, the future liability against the policies can be 2880. Therefore, this is called surplus. The surplus will be 520. And this much interim bonus have already been paid to the policy holders. This much have been paid. So surplus is 520. As said, the profit has been 560. You add back the bonus paid, otherwise bonus paid already, otherwise the surplus would have been higher. 95% profit belongs to policy holders. 5% profits belongs to shareholders. So 95% of 560. Policy holders are entitled to 532, out of which toward 40,000 is already paid. So balance payable to policy holders is 492. So balance payable to policy holders is this. You understand it well? Well, now there is a change. This is a correct answer, but there is another answer. Question says 110 they want to carry it forward. So out of the profits of 5,60,000, they want to carry forward profits of 110. So distribution is 450. Distributed 95% to policy holders, 5% to shareholders. Shareholders will get 22,500. Policy holders will get 427,500, out of which 40,000 already paid. So this is 387,500 payable to policy holders. 387,500. Yes, the correct answer. Please read the next question. Please communicate. Please understand. Time is precious, guys. Expect a positive result from everybody. Please read the question well. Please read the question carefully and well. I will explain it in my own way. Now, this is balance of revenue count. No, this is balance of life assurance fund. So the balance in life insurance fund in lakhs is 240 in lakhs. The net liability as per actuary is, this is called valuation balance sheet. Life assurance fund, the balance is 2 net liability as per actuary. The surplus is this much. Interim bonus paid already, otherwise surplus would have been higher, 75 plus 25. Otherwise surplus would have been 100. Let's match the answer till 100 in lakhs. Yes, yes. C. Remove 5 zeros, it is 100. Yes. 95% belongs to policyholders, remaining belongs to shareholders. 95% of 100 means 95. 25 already paid, balance payable 70. Okay. Policyholders are asked, you want this amount now? Policyholders are asked, you want this amount now or as immediately in cash, that is called bonus in cash, or you want it along with the claim at maturity. When the amount is given, bonus is given along with the claim at maturity, it is called reversionary bonus. Total policies outstanding are for 600 lakhs. So total policies outstanding are 600 lakhs. You want bonus in cash. You want bonus in cash. You want reversionary bonus. That is given at the time of maturity, at the time of the claim. If they will take now, they will get 105, otherwise 185. They will get 105 versus every 1000 of policy amount. 185 versus every policy amount. 3/5 of the people agreed for this, 2/5 of the people agreed for this. I will show you the beautiful calculation. You just wait here. Out of 600 lakhs, 3/5 agreed for this, and they will get 105 versus every 1000. So this is going to be bonus in cash. So I will make the calculations for you easy. 600 into 3/5 into 105 divided by 1000. 37,80,000. That is bonus in cash. 600 lakhs 2/5 says reversionary bonus, and reversionary bonus is 185 versus 1000. 600 lakhs 2/5, 44.40. I mean to say 44 lakh 40,000. 3780 and 4440. First of all, match the amounts. The amounts will match. Yes, the amount will match. Now we'll learn entries. Your feedback is very encouraging and very important, guys. Hope you know what is insurance chapter. Hope you have done it. If you demand any other chapter, I will stop insurance and teach that other chapter as per your demand, but demand has to be there. Tell the chapter you wish to do, I will do the chapter at your command. Going next, from life insurance fund, we will transfer the profits to P&L account. C will transfer the profits for policy holders to P&L account. From P&L account, we have to pay bonus payable in cash. Reversionary bonus is not to be paid immediately. Reversionary bonus is to be paid along with the claim, will transfer for the time being to the fund again. So reverse entry, P&L debit to life insurance fund 4440. Next question, guys. Next question, please. You ask the doubts from your chapter, guys. I am willing to answer any doubt. This is a lengthy question. I will do in the last. Normally in exams, you don't get such lengthy questions, so we can skip this question even. Yes, guys. Answer this question very quickly. I will tell you the beautiful way of answering it. Their answer is 95,000 will arrive at the answer 95,000 in a better way. They are asking you, there is some error, there is some typing error. This is not 12, this is 21. They are asking you to find the expense, the loss, the claim for the year 2021. For the year 21. The claim is claim when admitted, either intimated or admitted or paid, whichever is earlier. Out of three dates, whichever is earliest. Is earliest. This is 2020. We are talking about 2021. This is 2021. So the first expense, intimated, admitted or paid, whichever is the earliest, that will take an expense for the same year. So this 10,000 will taken for 2021. Yes. 19. It cannot be taken for 2021. 19. It cannot be taken as expense for 2021. 21, yes, 21, yes, sorry, 21, yes, 21, yes, one is 8,000, one is 12,000. So the total expense is going to be 1,20,000. Less covered by the insurance. So less covered by the insurance, the answer is 95,000. It's beautiful. Do you agree? It's all intelligence. What do you say? Hi guys, keep smiling, be proud of yourself, have great confidence, work hard. Next. Guys, a great question. Very important question. You are required to read this question once to understand it well. Please read the question. I will be waiting for you. I can't do anything else till the time you read the question. So please read the question, guys. I'm waiting for your response. चलिए जी, let's do it. All said, all done, all beautiful, all beautiful, all beautiful. Let's answer it. Sir, premiums earned from direct business, premiums earned from reinsurance, less premiums paid. So premiums earned from direct business, premiums earned from reinsurance business, premiums paid for reinsurance business. So the net premiums will be premiums net. Tell me the net premium 45. 45.75. 109.25. 22.5. Now the risk coverage, you have to create a risk coverage. So you have to create a reserve for unexpired risk. So reserve is to be created for marine. There is a spelling mistake. Instead of machine, it is marine. Marine, not machine. In marine business, the reserve for unexpired risk, marine, fire, miscellaneous. 100% for marine, 50% for fire, 50% for miscellaneous. The closing reserve has to be 45.75. 109.25 divided by 2. It has to be 54.63, precisely 625. 22.5 divided by into 50%, 11.25. Less opening reserve. Opening reserve for unexpired risk already there. So the risk reserve for marine is 37.5, 37.5. Opening reserve, 50 is for fire, 50 is for fire, and 12.5 is here. So provision to be, okay, additional provision to be created, additional reserve to be created, additional reserve to be created. So additional reserve to be created will be $8.25, 4.63 minus 1.25. So first of all, let's check the amounts. So 8.25, 4.63, 1.25 is beautiful. Very important question, guys. Very important question, guys. Now you will record the entry, you will create the reserve. So you will debit marine revenue account. And credit reserve for unexpired risk marine by 8.25 in lakhs, crores, whatever figures are. Next is fire revenue account debit. Reserve for unexpired risk. Fire 4.63. Third, the reserve is to be reduced. Reserve for unexpired risk to miscellaneous revenue account in lakhs or crores, whatever. That means the reserve for unexpired risk was like this in a column form. This is reserve for unexpired risk account. The opening reserve was 37.5. The closing reserve is going to be 45.75. 54.63. 11.25. So further reserve to be created is 8.25, 4.63, and 1.25. Total, you will do it yourself and it will match. Guys, if you think the chapter is damn easy, if you find it difficult, it will become difficult. Otherwise, it is very easy chapter. I am inviting you to tell me the doubts from any chapter you feel like. Insurance, banking, ESOPs, buyback, any other chapter. Guys, your hard work. Can you tell me the answer to this question? Can you tell me the answer to this question? You have to find the claim expense. Here you will get figure on accrual basis. Here you will get figure on accrual basis. Here you will get figure on accrual basis. And then you have to add this. Answer will be ready. I will doing it. From cash, you have to convert to accrual, add outstanding at the end, less outstanding at the beginning. Plus you will do 80,000. $47.99. Next is this one. Triple six. Next is this one. 230. Add outstanding at the end 113. Less 66. 230 plus 113 minus 277. Now claims, direct business, claims, reinsurance business, claims, reinsurance business. One is paid, one is received. 4799 plus 666 minus 277 000. Answer is 5188000. In thousands, it is 5188. Match your answer, guys. Take a minute to understand. Don't be in a hurry. Don't be in a hurry. Match your answer. Match your answer, please. Next question. You have to make revenue account, will make revenue account beautifully. We will make revenue account with a better presentation. We will be making revenue account with a better presentation, believe me. So we are talking about fire. That means general insurance. That means form B. Revenue account. Claims paid plus legal expenses regarding claims will be adjusted in the claims. Okay. Add outstanding at the end, less outstanding at the beginning to come to the figure on accrual basis. These two will be adjusted. In rough, the claims amount will be 490 plus 10 530. Next is commission is given 3 lakhs. Operating expenses are given 2 lakhs. Now come to premiums. Premium received less premium paid. The premiums are 12 lakhs. The premiums are 12 lakhs. Now, reserve for unexpired risk. Reserve for it will be 50% of the premium. Opening reserve is 550. The closing reserve is 6 lakhs. So 50,000 is the reserve to be created. Now reserve to be created during the year can be shown under premiums or shown separately. I will show separately. Your module has shown within the premiums. So now revenue account in rough. Here are premiums. Here is change in unexpired risk reserve, URR, unexpired risk reserve, reserve for unexpired risk. This is 12 lakhs. This is 50,000 change, 1150. This is called schedule 1. Now schedule 2, 3 and 4. Schedule 2 is claims. Then it is commission. Then it is operating expenses. you will find operating profit. Now the claims are 530, you have done it. Three lakhs and 2 lakhs. And the final answer, 1,20,000. It's beautiful, guys. Chapter gets over, yeah, guys. Chapter is over. It is so intellectual, it's so intelligent. Chapter gets over like this. It's beautiful. There is one question which I will like you to solve. There is only one practical question. Guys, solve this question yourself. We have done each and every question of insurance company from your book. Solve this question fast. Please solve it. You will get 2 more minutes and then I will be solving the same. I solve this question now. The claims are 10 lakhs plus outstanding at the end minus outstanding at the beginning. So the claims amount will be 10 lakhs plus, now it will be 10 lakh 60,000. Premiums will be 24,000. Unexpired risk reserve will be 12 lakhs. Opening reserve is 11 lakhs. 11 versus 12 changes 1. Answer will be premiums 24 lakhs. Now claims are 1060. Commission 64. Operating expenses 4. Answer is 2,40,000. Guys, the task is done. And indeed, it was beautiful as well. Next goes to We'll be doing very selective questions from standards. Guys, we are talking about events occurring after the balance sheet date. We are talking about events occurring after the balance sheet date. This is AS 4 and AS 10. So this destruction, the accounts are approved by Board of Directors on 20th of May and destruction occurred on 30th of May. It cannot be adjusted in the last year financial statements. No, we will call it event occurring after the balance sheet date. It will not be adjusted in the accounting year 2020-21. It will be before Board of Directors approval. We can adjust it if circumstances exist. Here also the accounts are approved on 20th of May and due to some tunnel boring problems, the cost increases, the damages were incurred in the month of June. That is again called event occurring after the balance sheet date because accounts have been approved by Board of Directors. So it will not be adjusted in the accounting year ending 31st March 21. No. Guys, accounts are not yet approved, so this will be adjusted. This is called adjusted event, adjusting event. It can be adjusted in the financial year. Circumstances were existing, the customer is bad, he can become loss asset, and it has happened before the accounts are approved by Board of Directors. We'll be touching upon each and every chapter slowly. Where is standard on PPE? Standard of PPE is very good. So let's go to the earning per share. It is AS 19 in AS 33. Guys, read the question to come to the real benefits. Come read the question, please. They have given the answer as. They have given the answer as what? 1,73,000. Where is per share? Let's come to the answer 1,73,000 ourselves. Please read the question. We are talking about Ind AS 33, AS 19, earning per share regarding. So the net profit before tax is guys, the net profit before tax, you call it PBT, PBT, profit before tax. It is 2,50,000, 3,50,000 minus 30%. It is 1,75,000. Now the preference dividend is going to be 2,000. So profits available for equity shareholders is 1,73,000. Your answer is now we have to calculate something more. 3,600 and then issue 1,200 and then bought back share 600. So we have to tell the weighted number of shares. Let's match the answer. How to calculate? The answer is 4,200. What will be our answer? $3,600 shares remains 3,600 for April, May, June, July, August, 5 months out of 12 months. Then we issue 1,200 more shares. Then we become 4,800 shares. 4,800 shares for the next 4 months, September, October, November, December, 4 months. Then we bought back 600 shares. We are remaining with 4,200 shares for the remaining 3 months. Here 12 is the common. We can divide at last. So I am using the calculator. 3,600 into 5. Answer is 4,150. Why answer is different? Why answer is different? Answer shouldn't differ. Let's check the logic. There are so many errors. There are so many errors. There are so many errors. This is 21. This is 22. $3,600, then 1,200, then 600. Let's do this manner as well. Let's do this. Let's do this in this manner as well. No problem. It is. Oh yeah, it's my answer is wrong, guys. Sorry. It is 31st Jan. I read it 1st Jan. 2 months. Wait. I read it as 1st Jan. It was 31st Jan. Sorry. I do it again. 3,600 for 5. 4,800 for 4. 4,200 for 2. This becomes 45,600 divided by 12. Answer is 38. What is happening? Total again. This is 5. Total 12 months. 3,600 into 5. 4,800 into 5. 4,200 into 2. 50,400 divided by 12. Answer is 42. कहते if the profit is 21,000, then 21 lakhs, then earning per share will be earning per share 21 lakhs divided by 4,200. That is weighted average number of shares, 500 rupees. Now they are talking about diluted earnings and we need to master it. Yeah, it is going to be very easy. Yeah. It's going to be very easy, guys. Please support. You may find it difficult. It will not be difficult. Do one thing. You solve this question. You solve this question yourself. Yes, you solve this question yourself. Then tell me. Then I will solve it. Let's see. Solve it. Basic earning will be basic earning will be PAT is for equity shareholders and equity shares are 10 lakh to rupees 2. That is basic. Answer for the basic is, where is the answer for the basic? The answer for the basic is rupees 2. Yes, rupees 2 basic. You said diluted. You feel debentures are no more debentures. So 20 lakh of debentures into 12% into 12% into 12%. If they are not debentures, this 20 lakh is also equity shares. This 20 lakh is also equity shares, and that will be equivalent to converted into 10 ordinary shares. Each debenture into 10. So instead of okay, instead of 20,000 debentures, 20,000. You will get 10 against 1. You will get 2 lakh more shares. I will explain. If you will not pay debenture interest, your net profit after tax will increase by, so 2,40,000 minus 30% slab. Your net profit after tax will increase. So the net profit will not be 20 lakhs. Now the net profit will be plus 168. That will be 21 lakh 68,000. You are assuming debentures converted into shares, then earnings will increase or reduce, and the total shares now will not be 10 lakhs. Now the shares will be 12 lakhs divided by 12 lakhs. 2168 divided by 12 lakhs. Answer is 1.81. That means we dilute it, the earning per share will get reduced, otherwise the earning per share will be better. Guys, at least do one question yourself, please. Give me the answer. Mine date September do not have 31st. Mine date September do not have 31st, so make the corrections. There is some problem in the answer. There is some problem in the answer. Believe me, there is some problem in the answer. No, then it is correct. Okay. They are giving the answer rupees 3. Can we arrive at the same answer rupees 3? Are you ready? Let's see. Guys, calculate basic and diluted. So let's give answer to basic. Let's give answer to basic. 8650 divided by 25 lakh shares. Answer is 3.46. Now diluted. The debentures are 1 lakh of 100 each into 10% issued in the middle of the year for 6 months interest. So 1 lakh, then into 100, then into 10%. What I've written is 1 lakh into 100 into 10% divided by 5 lakhs. 30% is tax, post-tax minus 30% tax, post-tax 350. So net profit will increase by 3,50,000. The net profit will be 90 lakhs. Okay, wait. Equity shares ordinary are 25 lakhs for the first 6 months. Then notional, I am assuming notional. I am assuming 1 lakh debentures, 10 debentures versus 1 share, 10 debentures, 10 shares versus 1 debenture. 1 lakh will become 10 lakh more. So 10 lakh more will become 35 lakhs debenture shares. ठीक है, 35 lakh shares. 35 lakh shares for the next 6 months, first 6 months out of 12 months, next 6 months out of 12 months. Okay, what I'm saying is okay. It seems the weighted average will be 30. We'll check the answer later on. So 90 lakhs divided by 30 lakhs. Answer is मजा आ गया guys. मजा ही आ गया इंटेलिजेंस के साथ. Great going. The next answer. Oh guys, lot of brain is to be used. Guys, lot of brain is to be used to get the answer. Brainy question. Let's apply brains. Let's. 10 lakh ordinary shares, the net profit is 24 lakhs, average fair value is 20. Average fair value is 20, but the option price is 15. 2 lakh more shares. If I don't dilute with that shares, if I don't dilute with the shares, I don't dilute. Without dilution, the answer is 24 lakhs divided by this is 2 lakh 40,000. No, now let's dilute it. Now let's dilute it. You call it, it's not topic, it's not diluted. It is revised. EPS and revised EPS. It's not diluted, it's revised. Don't call it diluted, please. This is called revised. It's not right. I will show you an example. Wait, I will show you. Let me do the answer first. Don't use the word diluted, I feel. It's my opinion goes so. Everybody thinking of something to advise. Here we go. Ten lakh shares. 10 lakh shares of 20. If we equate them, the each share of 15, this is equivalent to, earlier the share was 20, now the average price is 15. So the average price per share goes change. Plus 2 lakh shares at 15. At 15. This is equated at 15. I'm trying harder for it. This will be 13 lakh. There is some error in the question. We'll resolve the error later on. 24 lakhs divided by 15333. Wait. They say employees 2 lakh shares at the option of 15. Instead of 15, they make it 20. To make it 20, you make it 15. The purpose will be the same. This will become equate करते हुए 10 lakh 50. Yeah, वो भी ठीक है. That is also right. Okay. This is alternatively. That is okay. This is as good as giving free shares 2 lakh. 2 lakh into 15, you are getting 15. This will become 30 lakhs. You compare this versus you compare to get 30 lakhs worth rupees 20 share. You got should have you must have issued, you should have issued 1,50,000 shares. You have issued 2 lakh shares. So this is as good as virtually you have given 50,000 shares free. So 24 lakhs divided by not 10 lakh shares, virtually it is 10 lakh 50,000 shares. 24 lakhs divided by 1050. Answer is 2.29. Answer is 2.29. So we have done sufficient question of this kind. Let's move further. That's all. Guys, we are left with 20 minutes. Please tell me the topic of your choice. Tell me the topic of your choice to do. Last 20 precious minutes. Last 20 precious minutes. Topic of your choice. If you will ask me my choice, I will tell you. Let's do cash flow. Let's do cash flow again. Let's do cash flow again. Guys, tell me the page number for cash flow statement. चलिए, let's answer this question. Let's answer these questions. Very good. Your examination approach. Please tell me the answer. Net profit, net profit, net profit, interest received in advance. Okay, and in advance, cash from operations will be. So this is net profit. You want to find cash from operations. Don't call it interest received in advance. Don't call it interest. Call it, because this is not regarding operations. This is not regarding operations. Interest received in advance or outstanding or accrued. Don't make it a part of it. There is some error somewhere. Creating a question. So one option can be 15, can be 15,000. Is if I find the question is correct. Secondly, if I believe this is not interest, this is something else. So cash received in advance at the beginning will be income for this year. We added, now we'll deduct 2,000, will deduct 3,000, will add, it becomes 16,000. So the difference between A and D, depending upon we take question as correct or wrong. Where are the comparisons? Where are the answers? Wait, guys. Answer is A, 16,000. So we need to amend the question. Instead of calling it interest, don't call it interest. Don't call it interest. Call it income. Don't call it interest. Call it income. Income. Instead of word interest. Then 16 is okay. Machinery purchase 10 lakhs. In the cash flow statement, transaction will be, so whatever the cash is paid, that is the transaction. That's all. So outflow of investing activities 2.5 lakhs. Answer is B. Salary expense accrual basis. You must have accrual basis. This is accrual basis. Plus you must have paid outstanding of the last year. So you add it and you deduct. So this is 35,000. Answer is C. If the net profit earned is this much, an amount of debtors at the beginning and is this much, and the profit earned is this much in the cash from operational will be equal to, okay, change in debtors. Debtors are 10 and 20 respectively. Increase in debtors, decrease in cash. Answer will be 40,000. Answer is B. Bills receivable decrease, the cash will increase. Answer will be 60,000. The answer, net profits is 50. The bills receivable have been decreased by, bills receivable has decreased by 10,000 in the year. The cash flow, they are doing wrong. Answer is B, 40,000. Instead of bills receivable, please make it bills payable. Instead of bills receivable, please make it bills payable. The answer will be 40,000. Okay. For a finance company, the interest income is operating. Investing financing transaction that dash require the use of, do not require the use of. Income from dividends and interest, income from dividend interest is part of investing activity. For a company other than finance company, payment of interest is financing activity. Dash are short-term, highly liquid cash equivalents. Dividend received by enterprise other than financial enterprise is investing activity. Dividend received by enterprise other than financial and cash flow from investing activity. Dividend received. Answer is true. Answer is true, not false. Answer is true, guys. Cash collection from customers, operating activities में आएगा. Under direct method, statement is true. Increase amount of receivables will increase cash flows. No, false. Payment of income tax, false. Interest paid by investment company, कंपनी इन्वेस्टमेंट कंपनी है तो इंटरेस्ट पे कर रही है, वो पैसा लेकर इन्वेस्ट करती है, उनका काम ही फाइनेंस कंपनी है तो उनके लिए ऑपरेटिंग है. ट्रू. कॉपीराइट सेल कर देना, सेल ऑफ copyrights is investing intangible assets. Cash flow does not include cash outflows from the following activities. Operating revenue D. ये कैश फ्लो नहीं माने जाएंगे बिजनेस के. There are no cash flows. Sale of land for cash, they are inflows, not outflows. B. Depreciation is added, being a non-cash expenditure. A. Answer is 6, operating activities. Payment of debt principal D. 5th is D. There is a doubt from one of your members now. Please, instead of asking doubt on WhatsApp, ask here in the class. This is not the right way of asking doubt. Cash paid on preference stock, preferred stock dividend should be shown under financing activities B. The method of presenting net cash provided by operating activities that starts with the net income and adjust this is called indirect method C. Which of the following is from financing activities? Lenders as interest. Which of the following would be considered as cash flow item from the financing activities? Financing activities, cash outflow to the government of taxes. No. The cash outflow for repurchase of firm's own common stocks. No. The cash outflow to lenders. Outflow to lenders as interest. Yes. The cash outflow for purchase bonds. No, that is invested. C. Answer is C. Why B? Why? Financing. Payment of lenders. Answer is C. What is happening? Which of the following items would be subtracted from the net income while using indirect method? Which item will be adjusted? Indirect method. Which item will be deducted? Option is added. Bonds never adjusted. Gain will be added or subtracted. They are saying subtracted. Gain. C. Guys, it's a very long question. We may not be able to complete in 10 minutes. We may not be able to complete 10 minutes. So let's search for a smaller question. Or now we have done cash flow. Let's do multiple choice from another chapter. It's better, na? Yes, it's better. Where are the questions? Where are the multiple choice question, guys? Kindly tell me the page number. Yes. Guys, let's answer it. The balance in security premium cannot be used for payment of dividend. Answer is B. Answer is B. Which of the following is not a free reserve? Which of the following revaluation reserve is not a free reserve? Answer is C. Which of the reserve cannot be used for revaluation reserve? Cannot be used for bonus shares. Answer is A. Which of the following is not a condition for buyback of shares? Both fully and partly paid shares can be bought back. No. No. Partly paid cannot be bought back. Authorized by articles? Yes. Special resolution? Yes. Buyback should be completed within 1 year from the passing the special resolution. Seems A is the right answer. Debenture carries a fixed rate of interest. Correct. Debenture. Which of the following is? Company limited by shares may issue irredeemable preference shares. False. Unmarked applications may bear the stamp of the underwriter. False. Except 54, a company cannot issue shares at a discount except to be provided in 54. Shares cannot be issued. Answer is debentures carries a fixed rate of interest. Which of the statement is? Section 53A. Not C. At present, company can issue preference shares which are redeemable within 20 years. Sixth answer is B. Sixth answer is B. 20 years. B or C? 20 years. 20 years. After and before 20 years. C. Partly paid preference shares can be redeemed. Partly paid preference shares cannot be redeemed. They have to be after making them fully paid up. Answer is B. Dash prohibits issue of shares at a discount. Section 54B. The net profit from forfeiture issue of shares is transferred to capital reserve. A. Which of the following statutory books of a company? The statutory books includes register of charges, members, all D. Yes, guys. Any doubts till now? No doubts. We are left with the last 5 minutes. As per section 2, free reserve means reserves which are free available for dividends. The statement is true. Voluntary return of shares is not called forfeiture of shares. It is called surrender of shares. A company cannot buy back its shares from any person through a negotiated deals, whether on or off the stock exchange. Statement is false. On and off, yes, true. Cannot. Cannot. The company with capital which cannot be profitably employed may get rid of it by restoring to buyback and restructure, and it is a advantage, not a disadvantage. Statement is false. Issue of debentures as a collateral security means issue of debentures as a main security, and that the security in addition to the prime security. False. Debentures carries a fixed rate of interest, not dividend. False. Unmarked applications are those applications which bear the stamp of the underwriter. False. They are marked. A sum which is still to be paid by the company, still paid to the company, is called call in arrears. True. But it depends, called or uncalled. You call it uncalled capital, not call in arrears. The infrastructure company can issue preference shares with the infrastructure can issue preference shares tenure more than tenure exceeding 20 years. A limited by shares cannot issue preference shares which are irredeemable. Nobody can issue shares which are irredeemable. The register of members is one of the statutory books to be maintained by the company. So the answer is statutory reserve. Dash, guys, all well. Dash is that part of authorized capital which is offered to the public and subscribed by the public is called issued capital. Issued capital. The application money shall be refunded, shall be credited only to the bank account from which the subscribed Subscription was received, remitted, yes. When a share is issued at a value greater than the face value, it is issued at a premium. Fourth is premium. Except YD54, company cannot issue share at a discount. Fifth is discount. Guys, well, issue of bonus shares decreases the earning per share, decreases the net worth of the share, decreases the reserve. There can be more than one answer. Reserves. Dash share is permissible within the existing security holders proportional basis through the tender offer. Okay, bye. At the time of cancellation of owned debentures, that account is credited as the time of buyback of owned debentures. The owned debenture account is closed by crediting it. There are dash type of underwriting agreements too. A company is distinct legal person independent from its members. Okay. Now the next phase is multiple choice. Do we have time? We just have 1-2 minutes. Which of the following, this we have done already. Guys, please ask your doubts. We have done everything here, hence completed this thing. Completed. If time would have permitted it, we would have done these questions as well. Anyhow, next time, good luck. All the best.
Thank you, sir.
Yes, sir.
Thank you, sir. Thank you.
Rehan sir, Sanjeev sir, am I audible?
Yes, sir.
Sir, thank you so much.
Okay, sir. Thank you, sir. Thank you very much.
Thank you, sir. Thank you.